everyone, I'm here with Scott Horejsi, branch manager with MortgageRight, and we're about to talk about one of the hottest topics right now, interest rates, the upcoming Fed meeting next week, and whether it's the right time to buy. Let's jump in. Hi Scott, how are you?
I'm good, Rian. Thank you for having me.
Yes, thank you for being here. Everyone's talking about the upcoming Fed meeting on September the 17th. What are the experts expecting, and how could it impact our mortgage rates?
So the consensus is the Fed will cut 25 basis points on Fed funds. And then I think the key is going to be the commentary after the meeting about how many more cuts in 2025. Right now, the feeling is there's going to be an additional 2, so probably 75 basis points to 1% between now and the end of the year.
And what does that mean for a home buyer?
Well, what that means for home buyers is that it has the potential for rates to drop a little bit further. However, from even just the last couple of weeks, we've gone from about a 430, 435 on the 10-year Treasury to a 408 right now. So a lot of that is already known, meaning that when they do cut, it's kind of a non-event because it already knows the cut is coming.
Where are mortgage rates sitting right now, and how do they compare to earlier in the year?
Okay. So rates currently right now are much better than they were even only a couple of weeks ago. Loan program is an important factor. So for example, right now on an FHA loan, you're probably looking at around 6.125%, somewhere in there. Conventional rates are a little bit higher, maybe 6.375, something like that. A lot of it depends on credit, down payment, the property type, and so on.
A lot of buyers are on the fence. Is that a smart strategy, and why might actually be the right time to buy instead of actually waiting?
Yeah, there's a couple of factors to that. I do see some borrowers that want to wait for rate to drop even further. However, the issue with that is potentially you're going to have a much more difficult time getting a seller concession if you need help with closing costs and to buy down that rate. Also, you'll have, by definition, more people will then qualify for that same price point. So I think in general, it's better, let's just buy the home now. And then if rates do drop enough where it makes financial sense to refinance, then that can be explored down the road.
If the Fed cuts rates this year, how is it going to impact the buyer and their competition?
Exactly that, where you'll have more people writing offers. It's going to be a lot more difficult to get a seller credit. And then also, I think there's a good chance of price reacceleration with more demand. So those are the risks that you take by waiting versus locking that payment in now. Then that's your worst case scenario. And then when it makes financial sense to refinance, then that's when we'll have that conversation with them.
What's one myth about mortgage rates and what the buyer should stop believing?
Biggest myth I see, and this is all to do with the Fed, because the headline news is the Fed's gonna cut. And I get a lot of people that are, well, I'm gonna wait for the Fed to cut, then we'll buy. Oftentimes I'll use an analogy about a company whose stock that they'll announce earnings, they're going to blow away earnings next quarter. That stock moves in a millisecond. It doesn't wait for that earnings announcement 3 weeks later to come out. Same idea with the bond market. So everybody knows the Fed is going to cut. The question is how frequent and to what extent. So when the Fed does announce a cut next Wednesday, rates will probably do nothing, maybe even go higher. As a matter of fact, they cut twice in 2024 and rates went up from there. It's about inflation expectations. A lot of people just think the Fed controls mortgage rates. They do not. They control what's called Fed funds. So things like a HELOC or credit card interest, that's going to be a little more directly impacted. But mortgage rates are a direct, well, supply demand, but inflation is the driver of that. So if you think if you're an investor and want to buy mortgage bonds and you think inflation is going to be higher, there's going to be less appetite for that.
Okay. Well, you guys heard it right here. Thank you, Scott, so much for being here. If you're curious to learn more or to have a conversation with Scott about your mortgage interest rates, DM us below and we'll see you soon.